welcome to session number 9. We're going to talk about volume this time around, an important market dimension. H.M. Gartley identified in Profits in the Stock Market in descending order the three elements of technical study: price, volume, and time. In his intro to his chapter on volume, he asked this question: is it volume that causes price changes, or do price changes cause volume? On page 299 of Profits in the Stock Market, Gartley says, "It is important to point out immediately that the vast majority of volume studies have produced only a few general conclusions. The more deeply one studies the subject, the more evident it becomes that very specific conclusions are quite impossible." Maybe you've had the same experience. When you look at volume, it can seem really vague, especially when you plot maybe a histogram on the bottom of the chart to determine where there's high volume, low volume, etc. It can be rather vague, and so this is what Gartley was referring to. And what we're going to do in this session is get to a very specific conclusion as to what we're looking for. And it relates to what he referred to as one of the best trading opportunities. Gartley saw volume not as a trigger of events, but rather as a barometer of market conditions. He equated volume with market pressure, he called it, which he concluded depends on the supply and demand of stocks. Gartley made a distinction between volume when a stock price is increasing versus when it's decreasing. He designated the number of shares traded during a price advance as demand volume, because he believed that the volume was driven by the increased demand for the stock. The number of shares traded during price declines he referred to as supply volume, because according to him, investors dump shares and increase supply. Gartley discussed a number of important rules about volume, but there's two specific rules that we're going to be focusing in on here from his chapter on volume in Profits in the Stock Market. The first rule is this: when a volume increase is coupled with a significant price change, either higher or lower, prices are likely to continue in the same direction. So what are we looking for with that? We're looking at the XA leg. We assume that if there's a significant a directional move with the XA leg and there's a volume increase on that leg of XA, that once the trend reasserts itself, that this increase of volume will go in the same direction. The other rule we're going to look at here is he mentioned that a volume decrease indicates that prices are likely to change direction. So when we think of the AD leg, that if we experience a volume decrease during the AD leg, we're looking for a potential reversal of direction at the D point. So we're going to take those two rules, we're going to apply those to our core trade setup. And the rules are actually quite specific. On page 221 and 222, one of the best trading opportunities, the so-called Gartley pattern, the rules are specific when he discusses one of the best trading opportunities. All right, so when Gartley talks about one of the best trading opportunities, he describes what we know today as the Gartley pattern. In the Gartley Trading Method book, I identify what I call the WX leg. So this is the leg that precedes the X point of the Gartley pattern, and this is a leg that Gartley describes in one of the best trading opportunities. With that WX leg, we're actually looking at a trend reversal Gartley pattern, TRG. And remember, this is what Gartley said about the volume rules in regard to the trend reversal Gartley. He said, activity has shown a definite tendency to dry up. That's in reference to the WX leg. Now, in regard to the XA leg, he says volume expanding to the upside. And then in regard to the AD leg, he says volume drying up again. So bottom line is we have an XA leg, regardless if it's up or down, regardless if it's bullish or bearish, the XA leg has always got a volume expanding to the upside, increasing volume on the XA leg. The other legs that surround or bracket the XA leg, the WX and the AD, have lower volume. It's that simple. And this is what it looks like. Here's the volume rules. Number one, WX, if it's a trend reversal Gartley, if it's a trend continuation Gartley, we don't know what that leg is called. The corrective phase that goes into X, we'll call it question X. That's going to have declining volume, whether it's bullish or bearish. The WX or the question X is going to be low volume. Remember, he said that volume is drying up on that leg. Once again, XA, step number 2, XA, what do we see there? We need to have increasing volume. And then finally, AD, we have shrinking volume. So once again, regardless if it's bullish or bearish, the rules are the same for these legs. So let's look at the 4 different potential trade setups and the associated rules for volume in regard to those 4 different trade setups. And they are bullish trend reversal, bullish trend continuation, bearish trend reversal, and bearish trend continuation. So TRG, TCG, bullish, bearish. There's 4 different setups here. All right, so this is that bullish trend reversal, WX leg, as identified in the Gartley Trading Method book. If you can't remember what that is, go back and read that section. He said that activity has shown a definite tendency to dry up on the WX leg. So you could have higher volume here on the upper end of the WX leg, as long as we have volume decreasing by the time we get down to X. Now we have XA, volume expands. This is the only leg that we're looking for to have significant shift in volume, increasing volume on the XA leg. Gartley called it volume expanding to the upside, and then he said volume drying up again on this leg here, A to D. So you might be saying, well, how can we quantify this? Well, I'll show you in the software here after we go through these different trade setups. Okay, so this is our second bullish setup that we're looking at with volume rules. Remember, I call it the question X. Whatever you want to call this corrective phase here in an upward trend, we expect to see declining volume here. And then once again, the XA leg, we have volume expanding to the upside. And then the AD, volume drying up. So larger volume here on XA compared to AD and question X. Okay, so there's the 2 bullish trend continuation, trend reversal. Let's look at the bullish, or pardon me, the bearish trade setups. This is the bearish trend reversal. This is very much like the illustration in Gartley's book. The WX leg, as long as we see a declining volume as we start getting up to this high here. We have expanding volume from X to A. Same rules, even though it's bearish. And then AD, once again, we have the volume drying up as we approach D. One last bearish example here, bearish trend continuation, the question X. This is just that corrective phase in the downward trend. This is lower volume compared to XA is higher volume. And then we have volume drying up again from A to D As long as we see volume expanding from X to A, we're focusing on that. Bracket that with lower volume on either side. That's what we're looking for. So maybe you've looked at volume in the past and you're thinking, man, that was so hard to work with. It's hard to quantify. When I put that histogram on the bottom of my chart, it's really hard to tell if there's high volume or low volume. And a lot of us just toss volume out the window after we don't find a useful way of applying it in our trading. So what we're going to do now is see how we can use volume in our charting software to remove any subjective aspect of volume from our trading. Okay, so here's a trade setup that we've looked at before, HIG. This is a trend reversal Gartley pattern, TRG, and we're going to look at the volume on this one. So first of all, we'll put the emblem on here. And then we'll put the quad on. I have to do an alternate on this thing. Looks like turn off the magnets. Okay, so there we go. And let's scale it. Okay, lock it up. Oops. Okay. So a bearish 52. Tip of the quad is close to the 52. So that was our trade setup there. Now let's compare the volume on this. What we need to do is go over here. I have the volume button set up. It's actually the time price measure tool that's under GAN. If you go under tools, you look at GAN. There's the time price measure. There it is, right there. So what you want to do is set that up, create a custom button like me over here. And if you right click this, I'll show you the settings here. I got alignment top right, show labels, and the labels I have days and average volume. I don't have anything else on there. And so let me use the tool to do our XA leg first. Turn on the magnet, go to X, go to A. Okay, so you see it says 26 days, average volume 44.92. Okay, so now we got to compare this leg with the volume on the preceding WX leg and the AD leg. So let's do the WX first. Should have enough room here. So what we do is we start off, you click X, and you're going to count back how many days? Look at this, 26 days, right? So count back 26. And there you go, 26 days. And we're going to compare this many days with the XA days. Average volume 4,152 compared to 44.92. So that shows that the WX, or pardon me, the XA leg has more volume than this one right here. Remember, Gartley said the volume on the WX, or this trend, is drying up. And that's what we see here. Lower volume as we get to this high. Then we have an increased volume on this directional move. Now the expectation is that the volume on the AD leg is going to be low as well. So let's check that, make sure that's a valid point. We click A and we count back. We can see this over here. We have the bars already. Sometimes it's pretty hard when you don't have this price information already, but we can just click almost anywhere around here. And you can see if I just click there, average volume 3,346 compared to the XA average volume of 4,400. So we can see it's clearly lower. the AD leg has a lower volume compared to the XA. So those are the rules that we're looking for to confirm that we have a valid trade setup. All right, so let's look at another one. All right, so here's AIG on the S&P 500, a potential bearish trend reversal Gartley pattern here. So let's put the emblem on first. You can see I got the scaling set up already. Let's put the quad on here. Yeah, here's one of those times where you think it might be a alternate and it's not. See, this is not lining up. So I'm going to move this like that. And then I'm going to do this. Okay, that's a better fit. You can see that, right? Okay, so clearly a bearish 52. The tip of the quad is right here. And now we're just wondering what our volume is looking like in this situation. Let me just confirm that we got this locked up here. Zoom in a little bit so we can see what's going on. All right. So regarding volume, we're going to do the XA leg first. So going here to the high, down to the low. Okay, 23 days, average volume 246,958. Now we got to compare that with our WX leg. And we're going to count back 23 days to see what compare that volume with the XA leg. So you do that, you click the X point, and then you just drag this line over there until you get it showing up 23 days. There's 23. And I'm going to move this so blind people like me can actually see what it says there. It says 23 days, average volume 203,418. Is that number lower than our XA leg? You bet it is. So that shows us that volume was lighter going into the high than the XA move. Higher volume on the XA leg. We want to see that, right? Now, let's see what the volume is like on the AD leg. Hopefully that's less than the XA leg. So we click our volume button, we click the A point, and we go anywhere over here. What we've got so far, we'll just click this. It says we got well over 23 days already, and the average volume's just over 211,000 a day. That is clearly less than our XA volume on an average per day. So you notice how it's average volume? It's not cumulative volume, it's average daily volume for each one of those bars. So that's a really objective way to quantify volume versus having a histogram on the bottom here that seems really vague a lot of the times. We can really get specific here whether or not our volume rules confirm our trade setup. So this filter would have said yes, you want to put this trade on, and as we add bars there, you can see it reversed like a turned around on a dime there on the 52-degree angle on the Bex emblem. All right, and so just one last example here. DNR on the S&P 500, we got a bullish 52, and tip of the quad pointing here clearly to 52. Let's check our volume on this. Click X. Click A. 92 days, average volume 778 and change. So now what we're going to do is click X, walk back 92 days, and where are we at here? 92 right there. Average volume 400,000 and change. Obviously, here, let me drag this so you can see it here. 412,000 versus 778. So here's a bullish trend continuation trade. We're looking at this corrective sequence here leading into X, and we're comparing the two equal quantity of days. We can see that the volume is higher on the XA leg. That's what we expect to see. Now let's compare our AD leg. Make sure that that volume is lower than the XA volume. Click there and click anywhere over here. 109 days into it, we're only at 619,000 shares a day average volume, and that is less than our XA, which was 778. So this is a nice little filter using that dimension of volume to confirm our core trade setups. All right, so let's review what we've covered off here. We're going to use the time, price, measure, and market analyst to compare volume on each one of the legs in our pattern. With that tool, we're going to turn off all the labels except for volume and days. Look first at the XA leg and see what the average volume is on that leg and compare that. Walk back on the WX or the question X leg, depending on if it's trend continuation, trend reversal patterns. It really works well on the trend reversal patterns, but regardless, walk back, compare the volume, make sure that volume leading into X is lower compared to XA. After we've done that, compare the volume with the AD leg and make sure that that is less than the XA leg. Volume is really important. Gartley talks about it extensively, and this is one way that we can quantify it and put it into our trading system. There's so many different techniques to measure volume, and what we've done here is really boil it down to make it really simple as it relates to these high probability patterns that we're looking for. So in the next session, we're going to learn about statistical arbitrage, our last filter for our core trade setups.